Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello Marilena.
Thank you for joining us today as we're looking at the fundamentals and driving the markets currently. So Peter, a new day, a new week. What would you take notice of in the next few days?
Well, we have a number of monetary policy events and financial releases which are expected to grab the market's attention. Let's start with monetary policy events. On Wednesday, we have from the Czech Republic CNB's interest rate decision. The bank is expected to hike rates by a full basis point. And that could more or less provide some support for the krona, albeit, in our opinion, we would be watching out, besides the rate hike as such, also the forward guidance. We have to note that the bank has been hiking rates over the past months. However, inflationary pressures within the Czech economy seem to continue to rise and be intense. So I would expect the bank to issue also a rather hawkish forward guidance in order to predispose the markets of the rate hikes which are still to come, in order to curb inflationary pressures within the Czech economy. The second release would be Norges Bank from Norway on Thursday. And we expect the bank to hike rates, and practically the rate hike was foreshadowed also in the bank's forward guidance. Note that it had to pause the rate hikes in the last meeting, so we would expect it to hike rates now. Once again, forward guidance is expected to play also a key role regarding NOK's direction. Should there be a more hawkish view on behalf of the bank, a confident view, we may see practically the NOK getting some support. And the third monetary policy event, that would be also on Thursday. It's a little bit more exotic. We get from Turkey CBT's interest rate decision. We have to note that in Turkey, inflation is running above 70% year on year, and that's a big issue. Note also that the bank more or less had kept rates unchanged at 14%, which tended to weaken the TRY and at the same time may have reinforced inflationary pressures within the Turkish economy. I would also highlight that last week Turkish President Erdogan had mentioned the possibility of actually cutting rates even lower, and that was a big issue, as should that be the case we may see the lira tumbling, and that would practically create a vicious cycle for the Turkish economy, as that would practically weaken the TRY, at the same time increase inflationary pressures through imports, and at the same time practically cause further turbulence within the Turkish economy. As for financial releases, I would be highlighting the UK, the pound. Pound traders will have to look out for the UK CPI rates. They are for May, and they are expected to accelerate just a bit. But still, that shows us how strong inflationary pressures within the UK economy still are. The second would be the preliminary PMI figure. That would be more for the services sector, as the services sector comprises around 70% of UK's GDP rate. And we expect a drop, which would imply practically a slowdown of economic activity for the crucial UK services sector. At the same time, please note that the UK economy has been shrinking in March and April. So another sign of a slowing down of economic activity, that's not good for the pound. And last but not least, on Friday, for pound traders, we get the retail sales growth rate. A possible deceleration, or God forbid, drop into the negatives, would be sending another negative signal for the UK economy, which worries for stagflation and possible recession are high. So it's not actually encouraging for pound traders, and we may see the pound relenting some ground. The key release, though, in our opinion, for the week would be the preliminary PMI figures for the Eurozone. And we get Germany's manufacturing sector, France's services sector, and for a more rounded view, we get the Eurozone's composite PMI figure, all preliminary, all for June, all due out on Thursday, and all expected to drop. So practically that would be signaling that the euro economy is slowly but steadily slowing down its expansion. And that would be also a negative signal for the common currency. Mind you that on Friday we get also from Germany the IFO indicators, which are expected to drop just a bit, but still that would imply that current conditions and the forecast for the next 6 months for the German economy are not so good. So that could be another minus for the euro. That should sum it up for the week. Yeah.
Interesting. What is in the calendar today?
Well, the calendar actually is pretty slow. We don't have many financial releases. We had Germany's PPI rates. Other than that, we have no major high-impact financial releases today. Mind you that in the US it's a bank holiday, so we may see practically more fundamental issues creating some volatility for the FX market. I would be noting in the late European, beginning of the American session, the speech of ECB President Lagarde. And should she show some signs of confidence, should she reiterate the idea of hiking rates in July and September, that could provide some support for the euro. Another release, another monetary policy event which would be of interest, that would be during tomorrow's Asian session, when we get practically from Australia RBA Governor Lowe. He will be speaking. And a little bit later, we get also RBA's minutes for its last meeting. So we may see some support being built up for the Aussie there, as should they sound a little bit more hawkish, that could more boost the confidence of Aussie traders.
Okay. Didn't the Aussie weaken in the past few days?
Actually, it did. It weakened on Friday substantially. There were some worries for the Chinese economy. I would highlight the demand side more, but still for the Chinese economy as a whole. Mind you that the Australian economy exports a high amount of raw materials to China. So any slowdown of the Chinese economy could practically more or less slow down also the Australian economy. It was characteristic how iron ore prices took a beating. And mind you that iron ore is one of the main export products of Australia to China. So more or less, yes, that was a negative, but during today's Asian session, the Aussies seemed to recover somewhat and a little bit later started to stabilize. So we may have been over the worst for the time being. It depends on the market mood, given also that the Aussie as a commodity currency tends to be more sensitive to market sentiment. Should the market sentiment be more tilted towards a more optimistic side, that tends to provide support for the Aussie, while should the market sentiment be more cautious, that tends to weaken the Aussie.
Okay. And how are US stock markets behaving?
Interestingly enough, US stock markets on Friday stabilized. It was characteristic that the S&P 500 kept a sideways motion throughout the session. I would expect the stabilization to continue, given also that we have a bank holiday, and by the way, we may see futures presenting some thin trading conditions in the market, exactly due to the bank holiday of the US, and that could have an effect either way for your stock markets.
So fundamentally, the Fed's attention should be considered as a key driver, right?
Actually, yes. The Fed's the main issue. I would be highlighting practically two statements. The first would be Fed Governor, Board Governor Waller's statement that more or less he supported the idea of the bank continuing with 75 basis points rate hikes in the future. We should also note Cleveland Fed President Mester's comments, where she stated that for inflation to drop to 2%, which is the Fed's target, it could take another 2 years. So we would expect the bank to maintain a very hawkish, a very aggressive tone, and the tightening of its monetary policy to continue over the coming months, definitely well into next year.
Okay. What caused oil prices to drop on Friday?
Oh, that was an interesting one as well. We had a drop of WTI prices on Friday, where practically there were some worries about the possible global economic slowdown, which could negatively affect the demand side of the oil market. I would also be highlighting another factor. We had some reports coming out early during today's Asian session, which showed that Chinese imports of Russian oil have spiked in the past month, and that would be an indication which practically would imply that Russia re-enters from the side door the oil market as an oil supplier and practically increases the supply of oil, which could weaken oil prices further.
And finally, how is gold moving?
Gold seems to maintain a negative correlation with the US dollar. It was characteristic that the US dollar during today's Asian session was wobbling, actually dropping just a bit, and gold tended to grab on the opportunity and benefited from the weakening of the US dollar, getting some support, rising a little bit higher. So that would be a key driver for gold's price, and I would see it in relation with the US dollar as well.
Great. Thank you for your time, Peter, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of today's presentation. What you have in front of your screens is a 4-hour chart of S&P 500. That's a cash chart. You can see that the price action practically on the 16th of the month dropped, breaking, let me readjust this. Anyway, breaking the 3,735 support line has now been turned into resistance line. Yet the interesting part is that there has been a stabilization throughout the session on Friday. Well, we have to now readjust our levels. Definitely this is out of the question. This one as well. We keep this as a third resistance line, second resistance line. Have a touch here, another touch here for the R3. This was a prior support line, should be taken notice of. Was however aimed for here as well. And I would be keeping also this one, albeit it would be the 3,735 as a resistance line now. Used to be a support line. Let's go hunting a little bit for a third support line. Let's recheck the touches of the support levels. So the first support line touches here, practically in here. Second support line here. Now that could be rise a little bit. I'd like to see it somewhere here. Because here it has also some resistance touches and some support touches. So it was here as well. Well respected from both sides. And we have to add another support line. See this double drops here. Okay. I'm placing it here. Why? Because you have support, resistance, resistance. The lower end cuts through. Oh, has another support here. That's another good one. Anyway, we're talking about September touches here. So I don't know how relevant they actually are anymore. But they shouldn't be taken lightly. $55. Let's readjust this. Clear sideways motion here. So let's make a start. 3,985 becomes our highest resistance line for this chart, followed by the 3,860. We're always talking about S&P 500, the 4-hour chart. Now the prior support line of 3,735 becomes now resistance line. And the first support line is being placed at 3,600. Second support line being placed at 3,470. The third one at 3,355. There you go. So for the time being, we had an indication for a sideways movement of the index. We have given it a little bit of space to move around between the 3,735 and the 3,600. It's a tighter, actually, range-bound movement as the price action tries to find out exactly what direction it will have in its next leg. I would like to add here also the Bollinger Bands, indicators, trend, 2 deviations, 10-day moving average, yeah, in blue. Okay. Seems that it has some space. It's nearing the medium, 10-day moving average. Sideways bias stance, and to change our direction, our opinion for the direction of the index, to an side that we would expect for a bullish outlook, the index to rise, break the 3735, and start aiming, if not even touch, the 3860. For a bearish outlook, we would require clear breaking of the 3600, the S1, and start aiming for the 3470 S2. Note the RSI indicator is still between the readings of 50 and 30. Actually, it's at, let me check, 38, 39 at most. So it's still rather low. That tends to imply a rather bearish outlook, or bearish sentiment of the market to be exact. Should the bears actually take over, we may see the index breaking the 3600 and start aiming for the 3470. Overall, the bank holiday in the US may keep the index somewhat stable, but in the coming few days, should the signals from the Fed about a tight monetary policy intensify further, we may see the bears taking over. Once again, for the time being, we maintain a bias for sideways movement. Let's have a look now at gold. Okay. That was broken, but later on well respected. The 1836. Beautiful support touch here. Let's reverse this and turn it into green. Let's widen this now. Has to become a resistance line. Okay, maybe not that wide. Let's have a look where we can find some touches. Okay. That's actually pretty good. We'll keep this as mid level. That would be placed at 1920. I would be placing though another resistance level. See how the touches here as a support line? Traders tended to pay attention here. Nevertheless, the next resistance line in my opinion is here. Maybe a little bit higher. Yep. One touch, two touches, could be a little bit lower. Yeah. Let's fix this. 1945. So it's a 1945. We're stabilizing. Our final resistance line. Let's readjust. So the S3 becomes now the 1787. The S2 is now being placed at $1,807. So the touches here and here. The S1 is being placed at 1836. First resistance line with beautiful touches as a resistance line. Twice. Even tested here. It's being placed at 1870. Second resistance line, touch here. Being placed at 1903. And the final resistance line with a mid level at 1920 is being placed at 1945. Bias for sideways movement prevails. Look how the RSI indicator remains close to the reading of 50. Also note the narrowing of the Bollinger Bands tends to imply a low volatility for the precious metals. So we tend to maintain our bias for a sideways movement. Should the bears actually take over, we may see the precious metals price breaking the 1836 and start aiming for the 1807, while the lowest level for the bears would be the 1787 to the upside. And should the 1870 be broken, we may see the precious metal start touching, aiming for the 1903. Interesting chart. Let's have a look now at WTI, which had a drop on Friday. And if you look at the daily chart, you can see that we have practically a dropping price, with this being the main element. However, the bears seem to be still slightly in control in today's trading day. That would be practically 3. Let's have a look. Yep. That would be in the Asian session. Slight drop after correcting higher. Once again, stabilizing somewhat here. But overall, the tendency seems to remain bearish. we tend to draw a downward trend line. That would be something like this. But it's still wide. It has steepened substantially here. So, okay. Let's readjust. This becomes a resistance line as it has been broken. I would like to see this support line here. This touch. That would be around the 100 and 125. In green, please. Lock it. And now we have final support line would be at 101, 125, 105.10 would be the second one. 107.55, the first support line. Actually, the price action for the past hours seems to be revolving around this level. So note it. See how it breaks it, touches it, breaks it. Once again. Higher than that, we have the 109.90. Even higher, we note 113. Nice touches here. The resistance line here, that's a support line. And the 115.80 as the final resistance line. Fundamentally, always keep an eye out about the demand and supply side of the oil market. They tend to be the main drivers behind WTI's price. For the time being, expectations for a global economic slowdown, especially in China, tends to weigh on the demand side. So that tends to drive expectations for higher demand lower, and thus oil prices were on the retreat on Friday. There was a wide retreat, easy going. Let's have a look at the USD index. Give me a second to upload. Okay, while it uploads, let's move to Euro USD. Now Euro USD seems to be moving. This could be a little bit readjusted here. Touch, still valid touch. That would be placed now at 1.0355. Still some resistance lines here, support levels here. Let's go hunting now for another resistance line. Let's see where we can find this. Sorry. Drilling out to the 1-day chart. That would be touched. 1, 2, 3, 4. Let's drill down to the 4 chart and see how valid this is. Oh yeah. You can see how this level actually caps and prevents the price action from going higher. 1 time, 2 times, 3 times, 4 times. This is valid. And it's being placed at 1.0935 in red, please. 1.0755. There are two, there are one. The first resistance line is now being placed at, let me adjust this a little bit here. I want to see this touch here. Because you see you have practically a touch here and you have it again here. It was aimed for a couple of times here. Could go even a little bit lower. Just a tad, yeah. And that would be at 1.060. Euro USD has been moving in pretty low territory. Anyway, let's have a look at the first support line being placed at 1.0480. Second support line with beautiful touches, one twice here, more intense here, being placed at 1.0355. Last one we found before would be at 1.0210. It is once again wide sideways movement between the 1.06 and the 1.0355. Note the touches which practically set the boundaries of the sideways movement. At the same time, though, we have to note that we have the 1.0480 getting just in between the two. It seems to be the new support line. Once again, bias for sideways movement. The recent upward movement, though, of the pair tends to imply some bullish tendencies, i.e. we may see the US dollar weakening somewhat on a fundamental level. Today, should Lagarde's statements before the hearing, at the hearing before the European Parliament actually provide some bullish tendencies sound hawkish enough, we may see the euro gaining, while the US dollar may be wobbling also due to the US bank holiday of Juneteenth. It's going to be interesting here. Another interesting pair could be the Aussie. Let's have a look. Where's the Aussie? It is. Okay. Still in a wide sideways movement, but some readjustment could be taking place here. It has broken, yet has recovered above the 0.6950. Seems that our pair here needs more moving space. But sideways motion seems to be in order. Note how the upward movement resembles the one against the Euro USD. An implication that the market sentiment has recovered from the bears, resembling practically the upward movement of the past 16 hours. It seems to be valid. So for a breaking, or if you prefer, to switch our bias for sideways movement in favor of a bullish outlook, we would require clear breaking of the 0.7050, the first resistance line, the R1, and for the pair to start aiming for the 0.7155. On the flip side, for us to be convinced that the bears are in control, we would require clear breaking of the 0.6950, the S1, but also of the 0.6850 and breaking below this level. I would require practically an invalidation of these two support levels here. And the price action to break A, the 0.6950, B, the 0.6850, and start aiming for 0.6730. That would also provide us with a clear downward trend line. Nice. Let's have a look at the pound, actually cable. Well, there has been an upward movement, but come on, this intensification, the correction lower, plays some ground here. Okay. Nevertheless, we have to switch this one into support line. That would be the 1.2210. Now we have 1.2660, 1.2470, 1.2330, 165, 1.2070, and the 1.1817. Note the mid-level at 1.1935. Actually, to tell you the truth, I would switch this into main level. It was a beautiful touch. It was very characteristic how the pair reached a low point here and reversed in an upward motion later on. Let's widen this. Look how volatile cable has been moving. Provides great opportunities for trading here. So once again, for the time being, a bias for sideways movement, maybe some bullish tendencies should be taken note of, but the RSI indicator is running along the reading of 50, implying a rather indecisive market. At the same time, the price action tends to remain pretty close to the 20 moving average, which is the mid level for the Bollinger Bands. We may see some stabilization here. Let's have a look at JPY, USD JPY. Okay, that's interesting. JPY has been weakening, and it's understandable. BOJ's interest rate decision wasn't exactly encouraging for JPY traders. So that was a bit of an issue, as the bank practically stuck to its, I wouldn't say dovish stance, but its ultra loose monetary policy. Let's readjust these levels. We are going to be needing 2 resistance lines, if we can find them, because mind you, this is pretty low levels. Nope. Monthly. Nada. Nothing close. Okay. Drilling back down to the 4-hour chart. Readjusting. Let's have a look what we have here on the movement. So we had a wide movement here and a wide range between the S3 and the S2. Both of these are to be set in red. The pair seems to have respected sorry, give me a sec. 135.60. So that stands. The resistance line. The support line, note the touches here. We have the 134. Followed by 133. Resistance line here. And 131.35, which is the S3, is going to be upgraded just a bit to reach the touch here. 131.50. My mistake, sorry. So the question is what's going to be next. Given the 150 pips movement, 160 actually, I'll be placing the next one on 135. Sorry, 137. And the next one at 138.5. May I stress you, however, that 135.60 seems to be well respected here. Once again, sideways movement expected between the 135.6 and the 134. We tend to maintain that bias. Note that there is an indicator below the 4-hour chart, slowly dropping, approaching the reading of 50, also implying some stabilization. Should the bulls take over, that would imply a strengthening of the US dollar or weakening of the JPY or both. That would imply practically a breaking also of the 135.60, which the pair's price action very well respected. That was on the 15th of June. And start aiming possibly for 137. That would be a possible target for the bulls. To the downside, and should the bears take over, we would expect the price action to break the 134, start aiming for the 133, maybe even breaking that as well, and start aiming for the 131.50. Very nice chart. Let's have a look at another commodity currency. I wouldn't look at another safe haven like JPY. I would prefer, let's have a look at CAD. USD against the CAD. Note the wide upward movement, which seems to have been broken. Yep. Yeah, definitely. me clear this up a little bit. So some stabilization could be in play. However, there is an intense bearish movement downwards, which should not be taken lightly. This is useless. Let's delete this. Anyways, let's see how this movement goes. First time, we have to switch the 1.2970, which used to be a resistance line, into a support line. Actually, this could go higher with a double touch twice. That would be the 1.3075. Come on. Go hunting for another support resistance line. Daily chart. Nothing in sight. Okay, that's nice. So we have some upward movement here. Drilling back down to the 4-hour chart. Okay, we have a couple of touches here, but I would prefer actually this touch. It's a clear peak here, which reversed the downward motion. Yeah, you can see it here. Yeah, I'm keeping this one. Okay, this would be the 1.32. Yeah. And the next level would be a little bit higher than this one. Somewhere here. Probably mid level. 1.3340. Now being turned into resistance line. Touches, tested, extensively tested here. Okay, let's close the chart here. We would make a start with the R3 being placed at 1.3340. Next one will be at 1.32. And the first resistance line at 1.3075. Lock. Let's see the support lines at 1.2970. The first support line. Second support line being placed at 1.2865. Support touch here, resistance touch here and here. And below that would be the 1.2780. That could go a little bit lower actually. We don't need this anymore. Yeah. $1.2760. So we can see that the pair had an upward movement which lasted practically from the 16th of June until the 17th, which was followed practically from downward movement with the CAD strengthening, the US dollar weakening, take your pick, has broken the upward trend line which had started to form and seems to be taking now a downward motion which should be continued. It should break the 1.2970 and start aiming for the 1.2865, which provided substantial support here and resistance here, here, and here. Lower than that, and should the S2 be broken, our next level noted would be the 1.2760, providing support here around, that would be the 23rd of May. To the upside, and should the bulls take over once again, we may see the pair breaking the 1.3075 and start aiming for the 1.32, while even higher we have the 1.3340. That should be it from me for now. Hope you enjoyed it. From all of us here at IronFX, best wishes for solid trading.
The USD tended to gain against its counterparts on Friday as the Fed's monetary policy tightening path seems to provide bullish tendencies for the greenback. It's characteristic that Cleveland Fed President Mester stated on Friday that she does not expect inflation to fall to the Fed's 2% target for 2 years, while other policymakers see the case for further 75 basis points rate hikes. Market worries for the possibility that the Fed's monetary policy tightening could bring about a recession for the US economy seem to increase and tend to weigh on riskier assets, yet US stock markets on Friday tended to stabilize. Please note that today it's a public holiday in the US, so no US financial releases and statements from Fed policymakers are expected, thus we may see trading conditions becoming a bit thin. We also turn our attention towards the AUD, which tended to retreat against the USD on Friday as there were wide concerns for the demand side of the Chinese economy. And it was characteristic that iron ore prices fell, yet the Aussie seemed to recover some ground during today's Asian session. Tomorrow during the Asian session, we note the release of RBA's minutes of its last minute, while the earlier on RBA Governor Philip Lowe is expected to make a speech and should be sound hawkish enough, may provide some support for the Aussie. US 500 remained relatively stable on Friday between the 3,750 resistance line and the 3,630 support level. We tend to maintain a bias for a sideways motion of the index, yet we would like to note that the RSI indicator below our 4-hour chart is near the reading of 30, implying a rather bearish market sentiment. For our sideways bias to change in favor of a bearish outlook, though it would require a clear breaking of the 3,630 support line and for the index to start aiming, if not reach, the 3,520 level. Should on the other hand the bulls take over, we may see the index breaking the 3,750 line and aim for the 3,870 level. AUD USD, after a sustained drop on Friday, bounced on the 0.6910 support line and is currently aiming for the 0.6970 resistance line. We tend to maintain a bias for a sideways movement between the pre-mentioned two levels, and we also note that the RSI indicator below our 4-hour chart is just below the level of 50. Should the pair find extensive fresh buying orders along its path, we may see it breaking the 0.6970 resistance line and aim for the 0.7050 resistance level. On the other hand, should selling interest be expressed, we may see the pair reversing course, breaking the 0.6910 support line and aim for the 0.6825 support level. Today, we note the release of Germany's PPI rate for May, which is expected to slow down and if so could weaken the euro. Yet euro traders may have their attention turned towards ECB President Lagarde's statements before the Committee on Economic Monetary Affairs of the European Parliament in Brussels. We note on Tuesday UK's CBI trends for industrial orders for June, Canada's retail sales for April. On Wednesday, we get New Zealand's trade data, UK's and Canada's CPI rates, all releases being for May as well as the preliminary consumer confidence of the Eurozone for June. Also on the monetary front note, from the Czech Republic, the release of CNBS interest rate decision. On Thursday, we note the release of Australia's, Japan's, France, Germany's, the Eurozone's, UK's and the US preliminary PMI figures for June, UK CBI distributive traders for June and the US weekly initial jobless claims figure. On the monetary front, we note the release from Norway of Norges Bank interest rate decision and from Turkey's CBT's interest rate decision. On Friday, we get from Japan the CPI rates and UK's retail sales both for May, Germany's IFO indicators, and from the US the final University of Michigan consumer sentiment both for June.
Hello traders, my name is Emily. You know there are traders who trade like hunters. They choose a pair, set up a scenario, where to enter the market and where to exit and execute when the terms are favorable for their plan and only then. On the other hand, you have traders which are all over the place. Those traders who learn to pick and choose their trades smartly usually tend to be the ones that succeed in the long term and evolve their trading style along with them. Whereas those traders who tend to overtrade usually rely on luck and intuition. Also, random trading or trading with insufficient information could prove costly both on opportunities missed as well as possible losses. So get a plan, be patient, and stick to it. Don't let your emotions overwhelm you, control them and make them work for you. From all of us here at IronFX, best wishes for solid trading. Before you start trading, it is important that you define what you are aiming for and how you will get there. Hence, it's important for you to clarify for yourself what your trading style will be. Each trading style has a different risk profile, which may require a certain psychological attitudes and approach to trade successfully. For example, if you want to find closure at the end of your trading day, or your session, you might consider day trading. On the other hand, if you think that your funds could benefit from the appreciation of a trading instrument over a long-term period, you may be more of a position trader. In your quest, you may have to adopt a trial and error approach to actually find your trading style. Just be sure your personality fits the style of your trading. Thank you very much, guys.
Our live session has come to an end. Thank you for watching. Join us again tomorrow at 12 p.m. Have a lovely day.